All right, how do you file taxes as a first-time buyer or a repeat buyer? Filing taxes can be overwhelming and confusing. It can seem like one of the most daunting things. And at the same time you're feeling overwhelmed, you're also wanting to save the most amount of money possible. So we're going to talk about the two main ways that you're going to file your taxes to save the most amount of money possible. It is not as confusing as it seems. We're going to break it down into two simple steps. At the end, we're going to talk about ways that you can file taxes and some other ways that you can find cost savings that you might not know about right now. So let's go ahead and dive in. My name is Kyle. I'm a loan advisor with winthehouseyoulove.com. Okay, so there are two main ways that you're going to file taxes. And first of all, when we talk about filing taxes, we're mainly going to be talking about if you are currently employed. Okay, so you get a W-2 or a 1099. Those are going to be most of the ways that you're doing that. If you're self-employed, taxes are going to be a little bit more complex for you since you have business expenses that you're managing along with distributions to yourself. We're mainly going to be sticking around the W-2 1099 area. So you're going to get that from your employer, and that's what you're going to use to file taxes. Now, your W-2 is going to show you your wages along with anything that was withheld, things like taxes or any retirement accounts, things that were withheld from your paycheck to get paid to the government. And when you file taxes, what you're doing is you're telling the government exactly what your expenses were so you can get a refund back, or you can see what taxes you owe. So there's two main ways to file deductions on your taxes to get the most refund possible. Because what you want to do to get the maximum refund is show the government your expenses as much as you can in the most ethical way possible. Okay, so there are two main sources. There is a standard deduction and an itemized deduction. Okay, so let's talk about the standard deduction first. The standard deduction is what most people take. All right, so the government basically says with a standard deduction, hey, we're just going to give you a flat out number of what we estimate your expenses are going to be. You can take that standard deduction or you can itemize. But a standard deduction, and we're going to go off of 2020's numbers, a standard deduction for a single person is $12,400. That means if you have your income on your W-2, your deductions would be $12,400, and then you get taxed on the income after that. All right. If you are married and filing jointly, it's going to be $24,800. So you do the same thing. You take your income minus that standard deduction, so $24,800, and then the income that's left is then what is taxed. So you can see that the more deductions that we draw, the less income that will be taxed. All right. So for most people, the standard deduction works. All right. So for instance, if you're single and you have less than $12,400 in expenses this year, then you might as well take the standard deduction. For most people, they don't have as many expenses as the standard deduction creates for them. So it makes more sense to keep the standard deduction. For instance, let's say on the standard deduction, you're a single person and you barely have any expenses that you can write off on taxes. Well, if you itemize, maybe you can only write off $2,000. But if you use a standard deduction, you can write off $12,400. So the standard deduction is easier, but itemized can save you more money. So if you have expenses that exceed these standard deduction limits, then you want to go over and start itemizing your expenses. So when you itemize your expenses, you're basically telling the government line by line what your expenses were. So let's go through some of the things that you can deduct as a first-time homebuyer. All right. So first of all, you need to know that you'll get Form 1098 from your lender. All right. So if you have a home right now, 1098 is going to show you the interest that you've paid on your mortgage. That way you can deduct it as an expense on your taxes so you can have less income being taxed. All right. That's going to allow you to write down mortgage interest on your Schedule A, that list of itemized deductions. So first, you can get interest. That can be deducted as an expense. Now, this is up to mortgages of $750,000. It used to be $1 million, but now it's $750,000. Something to keep in mind if you have a mortgage higher than that. Then you might need to talk to a tax accountant to see the best way to find cost savings there. But you can deduct interest from that Form 1098. You can also deduct points. That's going to be shown on your 1098 as well. Paying points is a prepaid expense up front to lower your interest rate. If you want to learn more about points, I do have a free guide called 7 Proven Ways to Save Thousands on Your Home. You can get it at winthehouseyoulove.com/free. It's going to tell you some different ways you can save money on your mortgage. So points can be deducted. You can also deduct local property taxes on your expenses as well. Also, PMI. So if you have mortgage insurance, meaning you put less than 20% down, or you have a government loan that requires some mortgage insurance, you can write that off as an expense on your Schedule A tax deduction. Also, if you have energy credits, now this doesn't always work in all regions, but some regions have the ability to qualify for energy credits depending on different cost saving that you have with your property. Okay, so when you add all these up, they most likely won't exceed what your standard deduction is. But if you take all of these deductions along with everything else that you can deduct, so you can deduct medical expenses, donations to charity, business expenses, things like that, then you might start to push past that standard deduction limit, meaning that itemized is going to save you more money. So if you're a first-time home buyer, really, the taxes don't have to be that complicated. You're going to get a form, that 1098, that's going to show you things that you can deduct. And then I would recommend you either talk with a tax professional or use a tax software that's going to ask questions and help you find different opportunities to save money with your taxes, okay? Because it's really not that difficult. The main decision you need to make is, are you going to go standard or itemized? All right, and some of that tax software can help you there, but you can begin to estimate when you list some of this out if you're going to go standard or itemized. Most people go standard, it makes the most sense there, but if you have a lot of extra expenses on top of your house expenses, that might work for you. So I don't want to give a recommendation for the best tax software because everyone has different opinions in different situations. I found that honestly, TurboTax, if you have simple tax filing, then you can do TurboTax for free. All right. If you get into a plan where you have to pay for it, then I might look at different alternatives. Credit Karma even has a free filing service. Free Tax USA has a free filing service. There's tons of them out there and a bunch of different other tutorials on ways to file taxes. So thanks so much for watching this video. I hope this cleared up the idea of how to file taxes as a first-time buyer.